What's up everybody? Welcome to the Stocks channel. My name is Cory and today we saw the broad market selling off, rolling over across the board. Is this going to be the rollover in the stock market before a major correction? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we did see SPY closing today negative 0.86%, and we're back to that critical support level at SPY levels of 412. Remember, 412 is a very critical support level for the S&P 500. If we start to see price action closing back below 412, that's going to seriously put pressure on the bulls, and it's going to allow the bears to try to short the SPY down to close this gap at $400. So where we go from here is going to be extremely critical, because this is one of those important battleground levels where the bears and the bulls are going to battle to see which direction this market is likely going to continue. Remember, just last night, I said that we failed to close back above the 20 simple moving average for 2 days in a row, so closing below the 5 EMA was going to be critical. Well, as you can tell from today's price action, we did close below the 5 EMA after failing to break back above the 20 simple moving average. So that level right around 416 was the 20 simple moving average, and that was the top for SPY today, and that's where SPY did find resistance. So right now, the most critical levels on SPY are 412 for support and 416 for resistance. If the bulls can break back above 416, then they are going to win this battle. If the bears break down below 412, then the bears are going to win this battle. So right now, the most critical levels you need to watch on SPY are support levels of 412 and resistance levels of 416. Remember that below 412, we still have support at the 50 EMA at 407. But there's no guarantees that that support level is going to hold up this time after we did bounce off that level before. So as we continue to test support levels, there's always the possibility that we blast right through it like a hot knife through butter. So be cautious right now, because it did sound the alarm on a close below the 5 EMA. The only thing the bulls have going for them is that we did not get a close below 412 just yet. So that's the critical level of support I want you to pay attention to tomorrow. And remember, things start looking a lot better if SPY gets back over 416. There's still a gap above that did not fill right around 418, so that's also going to be a possibility for the bulls to try to go fill that gap. But we still have a huge gap below at 400 that the bears want to go down and fill. So we're still in a battle of the gap scenario, and we're basically right in the middle of both of those gaps, so anything is possible. You see, we don't have any strong trending for the bulls or the bears, so there's really no trend that suggests that the bears or the bulls have an upper hand right now. That's why you're seeing such a whipsawing and volatile market, because there's no strong trend, and really with the volatility, there's great trades in both directions, and traders are taking advantage of the volatility. Also remember, if you zoom out in the larger degree, the last thing we did was form higher highs and a higher low. If we switch this over to a 1 hour chart, you can see that we did form a higher high on this 1 hour chart, because the last high we had on the 1 hour chart was right around $415. So if you're strictly looking at a trend on the 1 hour chart, and you're strictly looking at higher highs and higher lows, right now, it's still possible if we bounce off 412, that's going to be a higher low after forming a higher high. So if you draw this trend out, you can still see there's somewhat of an upward trend here if we can bounce off support at 412. However, if we break down below 412, you're then looking at a support level right around 409, and things start looking a lot more bearish as we continue to close below 412. So that's why that level is so critical, and that's why it's important to look at the trend and understand if you're forming higher highs and higher lows, or lower highs and lower lows. So going back over to the daily chart, watch those critical levels very closely and understand that you need to have an exit strategy if you're long on this market if it does start to break down. Yes, there's a gap at 400, but if we do start breaking down, we could continue to correct much deeper, and you need to protect yourself to the downside if this support level does start to break down. Next up is the Nasdaq 100 QQQ ETF, and we see the QQQs also closing at a very critical support level that I gave you last night right at 322. Just like with the S&P 500, we wanted to see the QQQs staying above that 5 EMA after trying to make some positive progress to the upside. We did close below the 5 EMA today, and we closed right on top of that critical support level at 322. So just like we did on the SPY, we'll zoom out and we can see the QQQs, the last thing that happened was a higher high and potentially now forming a higher low. So we can't just become overly bearish when the thing is sitting right on top of a support level, but we do need to understand if this support level breaks down, we're going to be retesting critical support at 316. And on the second test of that support level, there's no real good guarantee that it's going to hold up the second time. So right now, the bulls need to protect 322 if they're trying to drive the QQQs higher, And the bulls are still going to have critical resistance right at that 50 EMA, which is right around 327 now. As you can tell, all of these moving averages are negatively sloping and the triple Qs are looking very weak. So if the support level breaks down, the trend and the price action are going to start swaying to the bear camp, and the bears are really going to try to drive this thing down into the low 300s. So watch critical support at 322 with critical resistance above right around 327. Also, don't forget we do have an upward sloping trend line, and that level is valid as long as we're staying above that trend line. We're still in an upward trend. Remember, higher lows and higher highs, even though we do have a lot of volatility here, we are still forming a higher low as far as we know with the current price action. Let's also jump over to a 1 hour chart on the triple Qs, and we can also see on a 1 hour chart that we did form a higher high on a 1 hour chart. While it was only a short-lived higher high, it's still there in the price action, and we can still see that we did break above that level. So right now, even on the triple Qs 1 hour chart, while it doesn't look as strong as the S&P 500, we can still see somewhat of a higher high and a higher low situation. Remember, none of this matters on a 1 hour chart if the daily chart breaks down and we see the critical support level breaking down. I'm just trying to give you an objective look at the price action so that you can understand there is still possibility that this support level does hold up and we continue to bounce higher. So don't get overly bearish until we see critical support breaking down. Remember that when the market rolls over and it's looking weak, that's when you want to try to become a bear. Right now, the market is at a critical support level and you don't want to try to short at support. You want to try to buy at support and you want to short at resistance. Either direction you're playing this market, there's plenty of profits to be made, but just understand if you're a bear, you're shorting at resistance and covering at support. And if you're a bull, you're trying to buy at support and sell at resistance. Next up is the Dow Jones ETF, and we see the Dow Jones getting sold off today, going down about 0.75%. The Dow Jones was looking very bullish yesterday because we did get 2 price action closes above all the moving averages and we were still holding on to the bull trend. Well, today on the Dow, we closed below the 20 simple moving average, but we are still holding on to the bullish trend. So was this just a one-day fake out with the Dow Jones closing below that 20 simple moving average? Or are we about to come back down and retest the 50 EMA as support? Remember, the Dow never tested the 50 EMA yet, so it's still completely possible if we start breaking down, we could be coming back down to about 335. So upside critical resistance on the Dow is still 341.7 with critical downside support at 337 and 335. Remember, there's still a gap to fill above at 347.7 and there's still a gap to fill below at 331.7. So which gap is going to get filled first is still to be determined. So watch the critical resistance and the critical support levels very closely. Remember, the Dow Jones has the benefit of a bull trend while the other indices do not. On the Russell 2000, we see it also going down about 0.75% today, and we see the Russell 2000 holding up above the 5 EMA right around 219.6. We're still within the upper trend line of support, but we did close back below the 50 EMA after closing back above it yesterday. So that level didn't stick, and we did find resistance at that 20 simple moving average right around 223. So remember, the Russell 2000 is more of a consolidation, but we did last see the Russell 2000 forming a lower high and a lower low. So while the Russell 2000 is staying above the support trend line, it's okay to assume it could continue to go higher. But if this support trend line breaks down right around 219, I would look for significant more downside in the Russell 2000. The critical support levels are going to be 215, 209, and our support trend line at 207. The critical upside resistance is still going to be 221 and 223, and we need to see the bulls trying to break back above those levels, or we'll continue to see the Russell 2000 rolling over and heading much lower. Next up is the ARKK ETF going up 1.4% today, and I guess it did not get the memo that everything was supposed to sell off today. We saw ARKK bouncing off that critical support at 97 and bouncing from there, and today we did get a price action close back above the 5 EMA. However, we have resistance at 106, and as you can tell, that resistance level did hold up today. ARKK is still in a bear market with a bearish trend and all of the price action hinting at lower highs and lower lows. So remember, when something's in a bear market, the bears are going to step in and try to short it lower at resistance levels. So watch resistance at 106, 109, and right around 113.5 because those are likely going to be the highs in ARKK before it continues to head lower. If ARKK can get back above about 118, that trend could start shifting and going back into a bull market. But right now, remember, the bear bias is real with the ARKK ETF, and it's going to continue to head lower until this trend reverses. On the VIX, which is our fear indicator, we see the VIX spiking a little bit today, going up over 8% and closing at 21.3. We did get a close back above the resistance trendline breakout, but we did find resistance right at that 21.6 level. Remember that the VIX is a measure of fear, and we did see the VIX spiking today on the sell-off. But right now, the VIX is above 20, and that's when we need to get defensive because we could see a lot more selling in a deeper correction. This is just a one-day event until proven otherwise, so if the VIX starts getting back above 21.6, you want to get a lot more defensive. If the VIX starts heading back down below 20, that could mean that this short-term sell-off is ending and we could be starting to head back higher. So watch the VIX above 21.6, you want to get more defensive, and below 20, you can take on a little more risk. On gold, we continue to march higher and we're getting very close to that price target at 1876. If we do break above that price target at 1876, we have one more price target above at 1923. Downside support on gold is 1850 and 1829. On silver, we're still consolidating after breaking out above the resistance trend line at $28. Look for a back test of the breakout as support and then a possible run up to the price target at $29. If this level fails to act as support, look for support at 27.6. On Bitcoin, we continue to head lower and we're currently down over 1.3%. The critical support level on Bitcoin is 41,700, and if that level does fail, we could see Bitcoin going all the way back to $30,000. Notice that Bitcoin is in a bear market and all of the moving averages are stacked to the bear side, so there's a lot of downward pressure on Bitcoin right now. Critical upside resistance is going to be 45,000 and 48,600. On Amazon, we dropped over 1.1% today and closed right on top of the 5 EMA. Remember, Amazon is coming out of a massive bull rally and it's cooling off and it looks like it just went through a correction. Right now, this could still be a buying opportunity in Amazon. And remember, if we do get a breakout over 3350, it could start running to 3800. Critical downside support is going to be 3230, 3209, and 3138. Critical upside resistance is 3309 and the breakout level at 3350. On Tesla stock, I'm going to make this really short and sweet. Tesla is bullish over 557, but if Tesla breaks down below 557, look out below because it's going all the way back to the 400s. Remember, Tesla is officially in a bear market, so you don't want to mess around. If support breaks at 557, do yourself a favor and sell it and get ready to buy much lower. Upside resistance levels are 594 and 633. On Apple stock, we dropped over 1.1% today, and it did look like Apple was trying to break out of this downward parallel channel. However, we saw the bears stepping in and driving Apple back below support at 126, which does mean it could be heading back down to 123 or 119. Remember that if Apple breaks out of this upward channel and starts heading higher, it could bring the rest of the market higher with it, so watch critical upside resistance levels at 126 and 128. The financial sector dropped 1.4% today and did close back below the 5 EMA. However, it's still in a very strong bull trend, so it still can continue to head higher from here. The industrial sector dropped over 1.4% today and closed right on top of that positive sloping 20 simple moving average. The industrial sector is still in a bull trend, but if it starts closing back below the 20 simple moving average, it could start reversing the trend. The healthcare sector closed up pretty much flat today, only going up 0.03%, and it did close back above the 5 EMA and it's still holding on to the bullish trend. The energy sector dropped 2.32% today and closed right on top of the 5 EMA. The energy sector has been very strong lately, so it still could just be cooling off, and it's still in a very strong bull trend. So to summarize here, let's go back to the S&P 500, and you can still see that we do have bullish sectors across the board. All of the sectors are still in a bull market except for the tech sector. We are at a very critical support level, and we're going to find out very soon if this market is about to roll over and die, or if this is just a very volatile fake out to confuse as many people as possible before the next move takes a direction. So remember that we do have fear in the market with the VIX spiking, and the market is going to continue to be a volatile whipsaw market, and it's going to try to confuse both bears and bulls alike. That's why it's so critical to stay objective and understand that we are still forming higher highs and higher lows in the higher degree. Yes, we are having a volatile market, but you really need to stay focused on the overall trend because the trend is usually going to dictate which direction the market takes over once the volatility subsides. So right now, until proven otherwise, we are still in a bull trend and we have yet to form a lower low in this market. That is very critical information to understand. And even though the market is being frustrating and it's being volatile, you have to stay focused in the larger picture. And if you need to, step back from trading and take a break until some kind of trend comes back to this market. Right now, we're in a consolidation and an unknown phase before we see a clear direction takeover in this market. Also, don't forget my Sunday video did explain exactly what to expect in the middle of June. If you haven't yet watched that video, there's a lot of very important information in there that you might want to be aware of. Also, remember on the Stocks Channel Discord, I'm doing intraday updates and analysis to help you stay on the right side of this market. I'll also be bringing new trade ideas to you weekly to help you absolutely crush the market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link in the description below. So thanks for watching, everybody. Remember to watch these very critical levels, and as always, I will see you in the next episode.